Mortgage rates have risen dramatically over the last year, from the low threes a year ago to 7.2% on average yesterday. Now that relentless uptrend is over, with mortgage rates dropping over 0.5% today. In today's report, CPI was up 7.7% annually versus 7.9% expected and the 9.1% peak in June, and up 0.4% monthly versus 0.6% expected. Core CPI was up 6.3% versus 6.5% expected, and up 0.3% monthly versus 0.5% expected. Shelter costs, which make up almost half of core CPI, were up 6.9%, the highest level since 1982, and 0.8% month over month, the biggest monthly increase since 1990. Now, obviously, this past month was not the best month in decades for housing prices, so these numbers show how much the CPI data is lagging. Housing costs and rents peaked in the summer and have actually been coming down for the last few months. If you put in the actual housing and rent indexes, core CPI would actually be negative. After 4 straight 0.75% rate hikes, the Fed has increased the Fed funds rate by 3.75% since March. The Fed is likely to continue hiking their overnight lending rate the next few months, but 30-year fixed-rate mortgages are controlled by traders and investors. They've already moved up over 4.5% from the bottom, pricing in at least 4.5% of Fed increases. As we see the lagging CPI data start to reflect the slowdown in housing, we'll see CPI continue to drop, the Fed softening its stance. Inflation is actually caused by an increase in money supply. If you hand out free money to millions of people, like the government did during the pandemic, of course prices will go up when people come back out from hiding. M2 money supply peaked in March, and with the midterm elections resulting in divided government, we're unlikely to see any more multi-trillion-dollar spending bills, which is great news for long-term rates. Long-term bond and mortgage investors want low inflation, since their money 30 years from now is worth a lot less if inflation remains high. It's great for long-term rates that the Fed is committed to keeping inflation down. Tighter monetary and fiscal policies will keep inflation in check and prevent mortgage rates from surging higher. While some people are calling for 10% plus mortgage rates coming soon, I'm confident the relentless uptrend in mortgage rates is over, and we won't see average mortgage rates above the 7s anytime soon. Please like and subscribe for much more useful information to come.